If you recently received an SMS from SARS saying your auto assessment is ready, or maybe if you have been using an AI chatbot to help you file your taxes, I'm sure by now you have probably asked yourself this question: do I actually need a tax practitioner, or am I paying someone for something that you can just do yourself? I'm sure this could be a question that would have come, especially in the recent years. And for sure, it is a fair question. And I think I want to answer you honestly in this video. And not because I am one of the tax practitioners and professional and I want to sell a product to you and to sell my services to you. But I am going to answer you as a professional, as a registered tax practitioner and a chartered accountant who sees what is actually happening or what actually happens when things go wrong. My name is Dumisani Chirisa, and I am a registered tax practitioner. I am a CGMA and a CASA, and I'm the managing director at TFS Consultants. We are based in Johannesburg. So in this video, I am going to give you a straight, I would call it a no-nonsense answer to whether hiring a tax practitioner is still worth your money, especially 2026 and beyond. By acknowledging what is real. So the landscape has genuinely changed. SARS has also invested heavily in technology over the last decade, and it shows now. It really shows. Auto assessments were introduced in 2021, for example, and every year since then, SARS has expanded the pool of taxpayers who receive those auto assessments. So in 2024 filing season alone, SARS actually issued 4.5 million auto assessments, significantly up from previous years. So for many straightforward taxpayers, those are the people with one employer, no investments, maybe no side income or side hustles. SARS simply pre-populates your return using data it already has from your employer, from your medical aid, and from your retirement fund. It's easy, it's there, it's just one employer and one of these things. Now, you log into your e-filing or the mobile app, you see a pre-filled return already done by SARS or automatically done by SARS. And SARS tells you, we think your refund is 3,200, or we think your tax liability for the 2026 year 4,500 or new. And then it asks you to either accept it or edit it. So, and this is for millions of South Africans or residents in South Africa. That is genuinely sufficient. It is enough for most of the people who just have one income, one employer. It is enough. They can either just accept or deny or edit. So I will be honest about that. I don't want to run around from that. Now, on top of that, you can add AI into the picture, because it is the age of AI. Tools like ChatGPT and even SARS' own digital assistant, it's called Loazi. That means that taxpayers can now ask plain English questions about their tax obligations and get a reasonably or somewhat reasonably accurate answer within seconds or minutes. So the question is not whether technology has improved the situation. It clearly has improved it. The question is, what does technology still get wrong? And that, my friend, that's my director, that's my client, is where the conversation gets interesting. And that's where a tax practitioner or registered professional comes into play. Now, let us talk more about the auto assessment specifically. SARS builds your auto assessment using third-party data, which means data from your employer, data from your bank, data from your medical aid, data from your retirement fund, that all these things, this is the data that the retirement fund submits to them or to SARS. But here's the problem. SARS can only know what it has been told, or the information that it has just collected from your bank, from your employer, and that's it. It takes automatically. Yeah, their system can just capture this thing automatically, and that's it. So it can use that alone to make an assessment for you. And that creates several gaps that cost ordinary money every single year. Now, I want to talk about these gaps. Now, the first gap, or I will call it gap 1, is your home office deductions. That is, if this applies to you. So if you work from home, or if you have a home office, even partially, and if you meet the requirements under Section 23B of the Income Tax Act, you may be entitled to a home office deduction. SARS will never include this in your auto assessments. It does not know the size of your income or of your home or of your home office and the expenses that you incur in your home office. It does not know what percentage you use exclusively for work. I mean, the area in your home that you use exclusively for work. It doesn't know. But a tax practitioner who asks the right question can legitimately reduce your tax income or your taxable income. And it can do that sometimes by tens of thousands of rands. Because they can ask you for this question: do you have a home office? How much of the expenses in your account? How much is the space that you occupy for your business? And, can you claim business expenses and all those kind of things? That's the first thing. Gap 2, that's your medical aid, additional credits, and out of pocket expenses. Now, SARS receives your medical aid contribution data automatically, so it can pre-populate that in your auto assessment. But it does not automatically know about qualifying out-of-pocket medical expenses or qualifying medical expenses you paid personally. Those specialist visits not covered by your medical aid. Those certain disability expenses that you may qualify for, it applies to you. Or expenses paid for dependents out of pocket, those that are not covered by the medical aid. And a practitioner, a professional will be the one to ask you, did you spend any money that you paid directly from your pocket that was not covered maybe by your medical aid for you or for your dependents that are on your medical aid? All these things can be asked by a professional. ChatGPT will not know if you don't tell it that. Your auto assessment does not capture that information. So these translate into additional tax credits under Section 6A and 6B. So missed every year by taxpayers usually who just accept their auto assessment without reviewing it. That is where the problem is and the danger is. If you don't know, you're just going to accept whatever auto assessment, and you accept when these things could be issues that can reduce your tax amount drastically. Or maybe it results you getting a refund, but you don't know it. Gap 3 is your travel allowances and logbooks. So if you receive a travel allowance from your employer, that is if you are using an employer vehicle, or if you use your company, your own personal vehicle for employment purposes of the travel expenses that you incurred at work, then a portion of that allowance is subject to tax, but only the portion not supported by actual business travel. So SARS taxes 80% of your travel allowance by default, unless if you submit a logbook proving your actual business kilometers. So most employees receiving travel allowances have no idea that they should be submitting a logbook. SARS will not remind you about that. It will not include that in your auto assessment because you are SARS and putting those figures and showing proof with your logbooks. So an auto assessment will not have all that information. Your employer will not remind you about that, but a tax practitioner will, because they will ask you all these questions. Now, gap 4, commission earners and variable income. Now, if more than 50% of your income is commission based, you qualify to deduct a much wider range of business expenses against that income, including cell phone costs, home office expenses, professional subscriptions, and more. So SARS auto assessments does not reflect any of this. You would have to know it. You'd have to have somebody who knows these things ask the right questions. So for a commissioner or for a commission earner not using a tax practitioner, this is potentially thousands of rands in overpaid tax every year. If they knew, they would be getting so much deductions and maybe end up not paying anything. But if you just accept that auto assessment, you will pay so much tax without knowing. Now, the gap 5 will be the provisional tax accuracy. So if you are a provisional taxpayer, which means a business owner, a freelancer, anyone who is earning, let's say as a sole trader or sole proprietor, and that kind of income that is not subject to payee or employees tax, then auto assessment does not apply to you because you won't get auto assessments. Your 2 provisional tax submissions per year require you to estimate your taxable income accurately. Underestimate it, and you face penalties from SARS. Overestimate it, and you are lending SARS your money interest-free, the money that you should be using. So a tax practitioner uses your actual financial data to calibrate this correctly and give you an actual proper calculation and reduce your tax bill. So after that, we have to then talk about AI, which we just introduced, we just talked about briefly. And we need to be careful here because I'm not one of those professionals who dismisses technology out of fear. AI is genuinely useful, or it is actually very useful. I use it myself in my practice. But I want you to understand that AI actually is in the context that I would describe much further. But I think AI is actually something that is very important depending on how we're using it, because it gives you correct information only to the extent of what you asked it. If you asked it without the proper information, it just gives you that's correct according to the information that you give. But the tax practitioner will know all the questions to ask you. So if you don't know what to ask in terms of doing your taxes, it's going to give you whatever answer that it thinks is correct according to what you gave it, and you may end up having serious expenses of tax bill inside. So AI is a language model, or AI language models that are currently available, like your ChatGPT, your Gemini, your Copilot, your Cloud, are trained on large data sets of text. So they are very good at explaining concepts, summarizing legislations, books, differences, and all those kind of things, and giving you a general guidance. But there are 4 things they fundamentally cannot do. And I want to talk about those things that AI cannot do for you. So 1, AI cannot access your actual financial data. When you ask an AI what your tax liability is, it cannot log into your E5. It cannot pull your IRP5. It cannot check your medical aid statements or your bond statements or your investment portfolio and collaborate information from it. It is working with whatever information you type in. But you are not a professional. You don't know much about the tax, really. So what are you going to ask that will help you much? That means it is only as accurate as what you tell it or what you ask on it. And most people do not know what information is relevant in terms of doing their taxes. Number 2, AI does not know your full situation. Tax is not just about the numbers you earned this year. It involves your marital status, for example, and in or out of community of property, and you need to take into account all these things in your tax return and inputting in your tax return. It involves whether you have a trust, whether you have a company or a CC. It involves your age and whether you qualify for some rebates as a senior person or older person, rebates. It involves whether you had a capital gain tax or capital gains this year from selling a property, from selling a vehicle, from selling shares and all those kind of things. And all these things can only be put together when they've been asked by a person who knows. AI cannot ask you the questions it does not know to ask or it doesn't know about. Number 3, AI can give you outdated or jurisdictionally incorrect information. It changes annually, usually with the budget and the tax laws amendment that happens almost yearly. So medical aid tax credits, for example, they also change, usually depending on the minister and what he's going to say. Rebates amounts will change. Thresholds for capital gains taxes will change. Tax rates actually can change from like 27 to 20%, whatever the minister is going to prescribe. Travel allowance rates that are published by SARS in their binding general rulings, they also change. So an AI model trained on data up to a certain date may give you tax information that is wrong or that was accurate for previous years, but is no longer accurate for now because things have changed depending on when last it was trained on and what data it was trained on. So a registered tax practitioner is required by law to keep up with these changes through what we call continuous professional development courses, CPDs. So that has changed during the year, at the beginning of the year, and they will collaborate with that. They will actually calculate what is correct for you using the rates that are applicable. Number 4, AI has no legal accountability. It is not accountable for anything. Are you going to have AI come to represent you in a court? So this is perhaps the most important point that you need to take understanding of. So if ChatGPT gives you incorrect tax advice and you act on it and you submit your using that information, and SARS comes after you with a penalty, a heavy penalty, ChatGPT does not go to SARS with you. ChatGPT does not write a letter of objection on your behalf. It does not appear at the tax court on your behalf. A registered tax practitioner, on the other hand, is accountable, will be responsible now for the figures that they're going to input for you, professionally, ethically, and legally. So that is because we are registered with a controlling board, a recognized controlling board. We carry professional in case things go wrong. We can be held accountable. They say, you calculated it, these are your figures. That accountability changes the quality of the advice. And that's why a tax practitioner will be important for your taxes than auto assessments, than AI. So I said at the start that I want to be honest. So let me tell you, that we do not need a tax practitioner. So I will tell you in what situations a tax practitioner may not be very important for you, especially when you're accepting your auto assessment is concerned. So you likely do not need a tax practitioner if all of the following are true. If all of the following things that I'm going to tell you are true, that's when you may not need it or may not need tax advice. So we have one employer and you've got one IRP5, which means you're just getting only income from that employment, that one. If you've got various other employments that you have, then you definitely need a tax practitioner. But if you only have one employer, one IRP5, and no other sources of income that are personal side hustles, you don't need a tax practitioner. That is, if you have no travel allowance, no company car, and no home office, if you do not any commission, and all your income is a fixed salary, that will. What? If you have no investments, you don't have any shares, any unit trusts, or any crypto that you have sold during a year or during this year, if you have no rental income, if you have not sold any property in the tax year, or your medical aid contributions are very straightforward. That means it's just one scheme, one special out-of-pocket expenses or no pocket expenses at all. And you also have no if all these things applies to you, then you don't need any advice or any tax professional helping you. You can simply just accept your auto assessment as SARS gives you. But if you have other things than what I have mentioned here, then you should not accept that auto assessment. You should actually seek for a tax practitioner advice, and not any other person's advice who is not registered as a tax professional. Because if things go wrong, that person won't be able to represent you or to stand for you. So if that is your situation that I have described here, an auto assessment is probably fine. Review it if you want. Don't just accept it blindly, I would still say. But a professional may just add limited value for a straightforward filing. But in other words, you can accept and submit. But also, there is another reality. There is also the reality. That profile, that one employer, nothing else, describes a shrinking portion of South African or South Africa's working population. There are very few of the people that will have all the things that I have described here. No other income, just one employer, one salary, one IRP5, one this, one that. No property, no shares, no other side hustle, no other income. Those are very few people nowadays. There is social media that can make people earn some money. Yes. So people now buy shares easily on various platforms. So there is most likely that there will be some extra income besides normal employment. So you see that even if SARS gives you an auto assessment, SARS will not have taken into account all these things that we have discussed. So if you need an actual tax practitioner who knows these things and will ask you the right questions, you may find that you may not pay any tax, or your tax liability will be so little after that. So it is important that you seek advice. Now, let me tell you rather, a genuinely good tax practitioner, or what a qualified professional does for you, that technology or AI or auto assessments cannot replicate. And this is me putting forward the profession and why it is important for you. So one, tax planning, not just tax filing, tax planning. So there is a massive difference between tax compliance, which means just return correctly, and tax planning. So there are different things. Tax compliance and tax planning different. Tax planning means structuring your financial affairs so that you pay the minimum legally required tax. So a good tax practitioner does not just file your return, which means tax compliance only. They will advise you before the year end on what you should be doing. Should you be contributing more to your retirement annuity to reduce? They can advise on that. Should your side hustle or side business be run through a company rather than your personal income or your personal name or your personal business account? Your personal account, bank account. They can advise on that. Is your travel allowance structured optimally? Is it sound? These decisions can save tens of thousands of rands if they are made proactively by a qualified professional accountant. They cannot be made by a those questions. It will only act on what you ask or what you query. But a practitioner is doing what they train for. They know all the things that they should be doing for you. All these things cannot be made by filing, cannot be made by just filing also. This is not tax compliance only, this is tax planning. Number two, dispute resolution and objections. Now, SARS issues additional assessments for almost every other returns. SARS issues also penalties for late submissions, for incorrect submissions, all those kind of things. And SARS makes mistakes. Yes, SARS makes mistakes. So when you receive an assessment that you disagree with, 30 business day window to lodge an objection under the Tax Administration Act, according to the SARS rules. That objection needs to be technically grounded and sound and supported by documents. It needs to cite the correct provisions, correct acts, sections. It needs to attach the correct supporting documentation. The tax practitioner who knows dispute resolution is worth their weight at this moment, because AI is not going to be there for you to object for you. So the cost of getting it or the cost of getting this wrong or missing the deadline entirely can be very catastrophic, and no AI will come to your doorstep and to help you. You would need somebody who knows how to deal with these things. Number three, SARS debt and compromise agreements. So if you owe SARS money, and you would be surprised, because so many taxpayers actually owe SARS so much money. Some which they know, and some that they don't know that they owe. So just one day SARS no come knocking. But here I want to talk about that debt where the tax practitioner actually knows about it. Yes, there are so many people that owe SARS money. So a registered tax practitioner can negotiate a payment arrangement. In some circumstances, apply for a compromise of tax debt under Section 200 of the Tax Administration, so that you can have a relief or compromise or kind of things like that. So SARS will not advertise this option to you. Usually, if you ask Loazi, which is the assistant, the SARS assistant AI, it might not even suggest that for you because they want you to pay. But AI cannot negotiate that for you as well either. But a practitioner can do that for you. Practitioner will remain important. Now, for holistic financial advisor. So the best practitioners are not just those ones that will ask to file your tax and just submit for compliance, but only they sit at the intersection of your accounting, your tax, and your business strategy. So here at TFS Consultants, for example, when we work with a business owner, we are not just submitting their VAT returns, for example. We are reviewing their management accounts. We are flagging cash flow risks for them. We are advising on structuring decisions. We are providing the kind of financial literacy or commercially aware guidance that used to be available only to large corporates with the big finance departments and finance budgets. We will give that to you. Because we know that small enterprises also in South Africa and Africa desperately need the same kind of advice on how to maneuver taxes legally, using the right channels and things like that. So all these things you can only do if you've got the right person, a tax practitioner, tax professional with you. So if that is good for your business and for you, then I need to talk about how to choose a good tax practitioner as well. So if you have decided that a tax practitioner is right for you, and you have listened to my video and see that no, in your situation you still need a good practitioner or a good tax practitioner to advise you, then so I will give you a quick checklist for choosing that right tax practitioner for yourself, because not all tax practitioners are equal, and there are unfortunately some who are registered operators in the market. So they will claim to give you an advice, but they won't be able to stand for you with their issues because they're not registered. So number one, you need to check their SARS registration. Every legitimate tax practitioner must be registered with SARS and affiliated with a recognized controlling body, which is called the RCB, Recognized Controlling Board. So the RCB include bodies such as your SICA, your SIPA, your SEMA, your ACA, your SIBA, and so many other, your SITE, South African Institute of Tax Professionals, and so many other that are that you can check the list on SARS. Try a tax practitioner or a tax practitioner's registration on the SARS website by asking them, give me your tax practitioner number, and it. If they cannot give you a SARS practitioner registration number, then walk away. Number two, their qualifications, definitely. So look for practitioners who hold recognized professional qualifications. Your CASAs, your CGMAs, your professional accountants, SIPA, your site professionals, all those kind of designations. The designations that require professional examinations, because they need to have technical competence in dealing with tax issues, ethical compliance, and continuing professional development. All these things are earned through understanding and through insurance. Number three, transparency on fees. So a reputable practitioner will give you a clear fee structure upfront. They won't say this, that. We want a percentage of your refund. They will charge you to do your tax return. They will ask you questions to understand how difficult your tax return will be. That's it. And then they will assess that this is going to be your cost. There is no any other hidden fee, and to say once you get a refund, you do this and that. No. Flat fees or hourly rates are far more appropriate, and that's what registered tax practitioner will do for you. Number 4, check. If they ask you questions, what kind of questions they want to ask you? Because a good practitioner will ask you more questions than you would expect. They will want to understand your financial picture first before they even accept the engagement, not just your RP5. If someone offers to file your tax return without asking you a single question about your income, then they are not adding value. They are just entering data. They're just trying to figure out. So you have to be careful with that as well. Now, so to answer the question directly, that first question, remember the question that, is a tax practitioner worth the money in the era of auto assessments and AI? That was the question. So for a straightforward taxpayer, remember we talked about it, for a taxpayer with no any other thing, a taxpayer who just receives their salary, one IRP5, no investments, no side hustle, no nothing, then we will say yes, they don't need a tax practitioner. But I would still say it would be better to just get 1 hour advice so that you are sure that everything is still, you can just accept going forward. Otherwise, you may be missing something still. But anyway, to be simple, yes, if you just receive one salary, one employer, you pay just one medical fund provision, and you have no home loan, you know nothing, you know assets, no sales, no side hustle, no shares, then you don't need a tax practitioner. You can just accept the auto assessments that are coming from SARS. But what I know is that the number of people who just have one income and nothing else is very small now. But for anyone with a business or a side hustle or side income, some investments, a bond that they are paying for their car, for their house, property, commission earning commissions, any complexity in their financial life that they just need to know how to maneuver, then yes, you definitely need a tax professional. You don't need to ask AI actually, you need a tax professional directly. The cost of getting it wrong without a tax practitioner is almost always 3 times higher than the cost of getting it right with professional help. So you may think that the practitioner is going to charge you much and you are budgeting. No, my friend, you are not. So, and for AI, use it. Yes, use it. It is a brilliant tool for learning and understanding your financial situation. You can just ask it to understand, and then you can still consult with the professional and say, is it true? And you'd rather let them file for you in case things go wrong. But do not confuse a language model with a licensed professional who carries accountability, responsibility for the advice they will give you. So technology makes administration easier. It does not replace professional judgment. It does not replace accountability and responsibility. It does not replace experience, and it does not it does not go with you to the courts to represent you in a text. So yeah, this is why you will still need a tax professional, even in the era of auto assessment and AI. And if you find this video helpful, please, you know what to do. Like, subscribe, share. If it genuinely helps you, please share with others, like I say, so that other South Africans can also get help. And in addition, if you are looking for a tax practitioner you can trust, someone who give you the right answers or straight answers and does not beat about the bush and not rubber stamp your e-filing submissions, then reach out to us at TFS Consultants. Visit us at www.troyfinserv.co.za. The list of our fees there. Send us an email at admin@troyfinserv.co.za or call or WhatsApp us on 067 778 9989 and we will give you the best advice. We are here, so let's talk. Thank you for listening. I'm signing out. Bye.